and India being one stock. But we have Vinay Khattar with us, Associate Director and Head of Research at Edelweiss Financial Services. Vinay, hi, good to have you on the show. Two or three questions I have. A, is this a bear market? And B, now that we are below the May 2014 level, is the Modi premium totally wiped out the market?
So my sense is this is not the bear market. As you just were discussing, we are getting punished for what's happening across the world. And it's not just that we have done nothing wrong. You see the kind of earnings growth numbers and everything that is actually playing out over last 4 to 8 quarters. It has not really matched up to markets' expectations. Earnings growth has not happened. Overall banking stresses continue to build up, and what's happened in the current quarter has absolutely surprised everybody. Though everybody knew that there was a higher degree of stress, but the kind of numbers that are coming out of most of the bank balance sheets, especially public sector bank balance sheets, has kind of taken the market by surprise, and that has added fuel to the fire. Having said that, I think the fall from 9,000 to about 60 or 69.50 at today's level is almost a 2,000 point kind of a fall. And at the worst point, when market capitulates, things look absolutely hopeless. I would want to take your viewers to 2 years ago, or maybe 3 years ago, when in August of maybe 2013, we had complete capitulation. Emerging market pack was being punished very significantly. India was one of the weakest there with huge amount of current and fiscal deficits. And the situation looked that it's not just going to remain a current account deficit problem. The amount of money that will flow out of India is so huge that it will become a balance of payment problem. And rupee had almost touched 68, 69 then. So at the lowest ebb, things look the worst. And today might be one of those days. Maybe another 200, 250 point fall is what we see in terms of charts, and where we could have first level of supports. But overall, I think over a period of time, value will begin to emerge. And that's what one should look for.
Okay. So is your sense that the global markets and Indian markets have already reached capitulation point? I mean, how much more can things go? In September 2008, we never thought we will get to March 2009, which was a much worse show. Will it be as bad as that? Or do you think we have done most of the selling?
I think a large chunk of selling has already happened as far as India is concerned. And here there is another point which may be of interest. If you look at the international money raised for Asia, there is no India-specific money which is raised on large scale. Most of the money gets raised either for emerging markets or BRICS or for Asia. And if people would want to exit any of these markets, India is bound to suffer. So you are seeing fund flowing out of India, and this is one of the key reasons. Overall, if you look at what Modi government has done in last 18 to 24 months or 18 months of their tenure, a lot of good things are happening. At the bottom of the economic cycle, governments can take action on the infrastructure side, and you see tremendous amount of spending, order books beginning to flow on the infrastructure side. Road sector obviously stands out amongst everything, but even what's being spoken of railway and defense, there is a lot happening.
So Vinay, will you put your money to work? How much of it?
So these are the time when you could start looking at deploying cash. If you have maybe 20 to 30% should go into the market at this stage.
20 to 30%. What's the absolute downside to this market, Vinay? And what is the risk at this point in time that this is a repeat, if not worse, than 2008? I know it's an uncomfortable question.
It's a difficult one to answer, that what is the bottom level of the market. As I mentioned, 6,800 was our call, that it is a strong support level as far as the charts are concerned. And at this point, this looks like 67 to 6,800 is where the market should find at least some level of support, at which point one would need to take further calls.
You said that you will put 20% or to 30% of your money to work, cash if you have it. Where will you put it to work?
So that's a good question. As we've said earlier also on your channel, we are bottoms-up stock pickers. So we look at individual companies, individual businesses, and wherever you find value, good management and strong business model, that's where the money should go in. Look at what's happened in last 2 to 2.5 months. Even good businesses where the valuations were very, very high have corrected significantly. So likes of Bosch, which were trading at 60, 70 times 1 year forward earnings, have all corrected significantly despite being excellent companies. So look at business models which are fairly valued and good and strong credentials, and where the earnings have begun to emerge. So the likes of Indocount could be interesting bets where you are seeing consistent growth. 4,000 crore market cap company, still trading at about 12, 13, 14 times 1 year forward. So those are the bets that you would want to take.
Okay.
I thought you would say gilt and gold.
Sorry?
I thought when I asked you where would you put money, I thought you would say gilt and gold. You're not saying that.
No, so we are only equity market guys.
Okay.
In terms of, if you were to look at asset classes which you would want to play across, then that would probably make sense. But then these would be, again, shorter term trades.
Okay. What about ICICI Bank and State Bank at these levels? They would fall in the category of bargains, but then you never know with asset quality.
Absolutely. So in terms of pricing, both the banks are very cheap. So SBI is practically trading at 0.7, 0.8 times its book, and nobody thought that it will get there. Just at 220, 225, almost most smart investors in the market felt that its bottom is there.
Yes.
But at 155 today, it's almost trading, what, 50, 60 rupees lower. So is there a bargain there? Yes, there is a bargain in terms of price. But would you want to enter just in yet? In terms of public sector banks, I don't think we are done with the surprises that are there. Maybe we would want to wait for one more quarter and then probably play it out.
And what about ICICI Bank?
ICICI again falls in a similar category because the numbers have surprised us on the downside. There is a significant degree of stress, and the kind of exposure that both these banks have towards infra, steel and cement and textiles. And those are the sectors which are in pain currently, and there is clearly no upswing that you see in those sectors. So the stress on the balance sheet should maintain, may maintain. So our sense is maybe you'd want to watch for one quarter, though the value in terms of price clearly stays, but the fundamentals need to be factored in and watched out for.
Okay. Do you think that more fear comes because the global commodity cycle can get even worse, the dollar can fall even more, the rupee can fall even more, and therefore the fresh stress will come? Or is it just unrecognized stress that you're worried about?
Latha, I think it's both. So let's look at the global commodities, what's happening. Most of the commodities are below marginal cost of production. Oil at whatever.
26 now.
$26 is below marginal cost of production for most of the players other than some of the OPEC countries like Saudis. A large amount of production in terms of oil and shale has gone off track. So if you were to track shale rig rate numbers, the rig rates on the shale side are dropping tremendously. So the shale production is completely off. A lot of countries which are producing high cost oil is off. Similar is the story on coal and iron ore. So you are below marginal cost of production, one. Second, if you were to look at, there are two kinds of cycle in the commodity markets. One is a long-term cycle, which is more like 20, 25 years, and then there are shorter-term 5-year cycles. On the first quarter of 2011 was the time when the correction started on commodities, and our sense is that it is possible that at the end of the first quarter of 2016, the commodities may bottom out. If that were to happen, the equity markets would find their footing. And then that could be a clear positive.
Okay, let's pray for that. Vinay Khattar, it was a pleasure speaking with you. Thank you very much for joining us. And what we will take home is that you have the courage to put 20 to 30% of your money to work. We are at least somewhere near the bottom from one point of view. We take a break on